Trump controls the Fed. No, Trump doesn't control the Federal Reserve. However, Trump's policies in terms of tariffs has sort of given the Federal Reserve a reason to sort of say out loud why we're pausing in terms of lowering the Fed funds rate. I want to explain this to you because a lot of people don't talk about this, but I'm going to talk about it. The Federal Reserve here in America operates independently. The Fed is not directly accountable to the people. The Fed is not directly accountable to voters. The Fed can pretty much almost do what it wants to do. You didn't vote them in, so that means you can't vote them out. So you may be asking yourself, why is the Federal Reserve defying Trump? And what does that mean for you or for us as consumers or investors? So I want to answer that for you on this video. Now, let me start by saying this, guys. Trump wants the Fed to lower interest rates. But today, the Fed came out and said, basically, we're not budging. Now, most people think this is all about just inflation, but in my opinion, what happened today goes a little deeper than just inflation. And on this video today, I want to explain to you why. I want to explain to you exactly what happened today, why I think the Fed is almost purposely defying Trump, and I want to explain why the Fed itself is really a propaganda machine. And towards the middle of the video, I want to talk about what we should be doing right now as consumers or as investors or even as small business owners. What should we be doing right now? So first things first. The Federal Reserve today, they held the benchmark rate that we all call the Fed funds rate. They held it steady at between 4.25% and 4.5%. In other words, they did not lower the rate like Trump wanted them to, even though inflation is way, way down at this point, right? And so you're saying to yourself, why isn't the Fed going to go ahead and lower the interest rates since inflation is way down, right? That's one reason I think that the Fed has pretty much made a power move, dug their feet in the sand, so to speak, right? And refusing to budge even under this political pressure from Trump. See, I think it's a subtle statement to President Donald Trump to refuse to lower rates at this point, right? Now, the Fed wants us to believe that they're always thinking about the long term and the best thing for the American people, right? Versus Trump's short-term push to try to get this thing done right now. But some people are saying, hold up. Federal Reserve, last September and November, you lowered the interest rates when the inflation was higher than it is now. See, when the Fed lowers the Fed funds rate, that's seen as sort of, in some circles, as an inflationary move because it incentivizes people to go out and spend. And when people go out and spend because money is cheaper to borrow because the Fed funds rate has come down, then what happens is the demand for things go up. And the demand goes up because everybody now has cheaper money to borrow and can go out there and buy stuff, more stuff. And anytime you're dealing with economics, when the demand goes up, typically that means the prices go up. So people see the lowering of the Fed funds rate as sort of inflationary or a means to get everybody out and spend and drive demand up. So if inflation was already high, this is what some people are saying, if inflation was already higher than it is now back in September and November of last year, and we know what happened in September and November of last year, that was election time for a new president, right? So people are saying, wait a minute, if you're not a political entity, Federal Reserve, then why did you lower the rates right around the time of elections? But now, today, the inflation rate is lower than it was back then, and you still refuse to lower the rates, right? So some people look at that and say, hey, what's going on there, Federal Reserve? Why are you late to the party on lowering the rates, right? Some people are saying the Fed is always, this Fed under Jerome Powell has always been sort of late to the party and doing things a little later than they probably should. Now, in terms of Trump wants the rates to come down for a number of reasons. And I think one of the main reasons Trump is trying to push this rate down is because he wants to see, obviously, some political gains from the rates going down and things and money getting cheaper to borrow. But also it's this. In 2026, we're going to be looking at a turnover, perhaps, in the House and the Senate. See, right now, Republicans have the majority House, majority Senate, and we have a Republican president. So coming up about a year and a half from now, when you have these midterm elections that happen, midterm elections might overturn all that. You might see a Democratic Senate and Democratic House. Who knows, right? And at that point, almost anything Trump is trying to get passed into law today is going to be very, very difficult to pass into law in about a year and a half because midterm elections are coming. Midterm elections are just those national elections that actually vote in new senators and new House of Representatives. Always takes place halfway through a president's 4-year term. And so that's coming up in the end part of 2026. So everything that Trump really wants to happen needs to happen before that time. See, most people still think, oh, well, Trump controls everything, right? Trump controls the Fed. No, Trump doesn't control the Federal Reserve. However, Trump's policies in terms of tariffs has sort of given the Federal Reserve a reason to sort of say out loud why we're pausing in terms of lowering the Fed funds rate. Trump saying, okay, I'm going to install these tariffs on these various countries around the world, sometimes 100, 200% tariffs. What happens is that gives the Fed the reason to say, hold up. We ain't going to touch rates because guess what? We don't know what's going to be the outcome of you installing these tariffs on these countries' goods coming into America. So guess what? Trump, the Fed says, we're going to pause any type of reduction in the rates until we see what happens with the results of these tariffs. And I think that's a message to President Trump. The Fed always comes out and says, hey, we're looking at a data-driven approach, right? We're looking at inflation. We want to get it down to our target 2% for core PCE inflation, which is just inflation minus food and energy. We want to get our core PCE inflation down to 2%. We're also, as a Fed, this is what the Fed is normally saying, we're also looking at steady labor conditions that aren't in flux or aren't, unemployment rates not too high. We're looking at all these different various things to make our decision every time we get together, 8 months every year that we actually have our Federal Open Market Committee meeting, FOMC meeting, and decide what we're going to do on rates. We're looking at all these things. We're not focused on politics. We don't care Democrat, Republic. This is what the Federal Reserve is saying. But I'm saying the Fed is also saying, Donald Trump, you don't control us. We can defy you and operate outside of you because you don't control us. I think that's what the Fed is saying. But let's talk about today's meeting, okay? The chairperson of the New York District of the Federal Reserve, Jerome Powell, he came out and obviously said there are some reasons why we are leaving the Fed funds rate at between 4.25% and 4.5%. And here's some of the reasons. He said basically the economy is solid right now and unemployment is at or near almost record lows. Unemployment has been super duper steady and it's only at 4.2% right now. And he also said that we're almost at near what they call maximum employment, right? And he talked about inflation being down. He gave some inflation numbers. He said the core PCE inflation is down to 2.6% year over year. In other words, the price of goods other than food and energy has gone up 2.6% since this time last year. And so he reported that inflation is down, getting nearer and nearer to their 2% target. And he also said that consumer spending has sort of moderated. But he did point to, very clearly, elevated uncertainty due to the policies regarding and surrounding tariffs. And he said that pretty much remains a concern of theirs. And he also pointed to the fact that he did mention this, he talked a little bit about this. He said GDP is sort of projected to grow slower than it had been growing and even slower than they had recently predicted back in March of this year, a couple months ago. He said wage growth is also kind of becoming more balanced. And he also came out and said that they projected that the unemployment rate at the end of this year into next year could go up or may go up to 4.5%. So inch up just a little higher than it is right now because of the fact that new jobs weren't being produced as much as they had been, which we know that new non-farm jobs nowadays is lower than it was last year. The average of last year, right now, new non-farm jobs are not at the level they were last year. So he did mention that as well. And we talked about that in a previous video I did just about a week ago. And the Fed Chair Jerome Powell also said that long-term inflation projections are actually lower than they had been, and they're closer to the 2% target that they're looking for. So he said, hey, we're keeping the Fed funds rate steady at where it is. We're also rolling assets off our balance sheet. And he spent a fair amount of time in terms of answering questions regarding the potential for tariffs to still cause inflation to go up. Although we haven't seen that at this point. Waiting to learn more and waiting until we see more action or more data-driven information. Look, most people are saying, listen, It's time, Jerome Powell. It's time to go ahead and lower these rates and make borrowing money a little cheaper, ease a little pressure off businesses and consumers who want to go buy things and want to go actually borrow some money. A lot of people are saying it. And the Fed is saying, hold up. No, we're defying what you want to do, Donald Trump. We're defying the whole notion that we need to be hasty and cut rates. Now listen, I want to explain this to you because a lot of people don't talk about this, but I'm going to talk about it. When you're listening to the Federal Reserve give speeches or give some type of commentary, you need to understand, guys, that when the Fed speaks, it's propaganda, because the Fed is a propaganda machine. Let me sort of explain what I mean by that, because that may not be a very popular thing to say. But listen, the Fed, they manage the narrative of what they say because they understand fully that what they say has the ability to sway markets. What they say has the ability to tank the market. What they say has the ability to really, really make people worried and concerned and have an effect on how people spend their money. And that moves the economy. So you'll hear the Fed oftentimes, they'll use very optimistic and very vague type of language. When you hear them say things like maximum employment or soft landing, or we're being very data driven and data dependent, right? These are soft words to keep people calm. And just frankly, just flat out, they want to make sure people don't panic, right? So they use these type of soft terms. Look, the term maximum employment, Federal Reserve Chair Jerome Powell, he probably said maximum employment about 4 or 5 times a day. Why did he say it 4 or 5 times? Look, the Fed doesn't want everybody working. The Fed does not want to see every single human being in America working. That's not what they want. They want maximum employment. But if you're listening to the word maximum employment, it's making you think, oh, they want everybody to go back to work. It's a good sounding set of words, right? It makes everybody feel good. But that's not what they want. They just use the term maximum employment as sort of a slick code. Right? It's the same reason the Federal Reserve is not federal. It's not affiliated necessarily directly with the federal government, but they use the term Federal Reserve. Why do they use that term Federal Reserve if they're not a part of the federal government, right? It's sort of that slickery and trickery language that they use to pacify or at least kind of pull the wool over consumers, the American people, in my opinion, right? The Fed uses their messages always to control narratives and control public sentiment. They need to control how we feel about them, and that becomes the primary goal of their communication to us. Because listen, if the Fed never came out and spoke to the American people ever, we wouldn't trust them. And so they have to come out and say something. And if they come out and use these really cold words with this cold language and really soft sounding, calm words, it gives them legitimacy and with this claim of transparency that they have. But listen, the Fed needs us as consumers and investors to believe them. They need us to trust them. And another thing is this: the Fed serves institutional investors because it's the institutions, the large institutions, the insurance companies, the large businesses that invest. It's those institutional large investors that really move the markets. More so than just me and you, a bunch of us invest. Look, it's really the big investors that move the markets, right? How do we know that? Well, because whenever a huge market is about to tank, the Fed will rush in there to save them, right? Work with the government to save them. Think about 2008 when the financial institutions went down, along with some automobile companies were going down, right? The Fed jumped in along with the American government and saved them. But think about 2021 when we had the pandemic. And the Fed did what? The Fed started their quantitative easing. In other words, the Fed injected a bunch of cash into the financial markets and into the markets themselves. And they injected cash by simply buying bonds from banks, and then giving those banks cash money and then lowering the rates and saying, hey, banks, now we bought bonds from you with this cash that we had printed out of thin air. Now you have cash. We lowered the rates. Everybody can go borrow money from the banks because the banks got cash. The Fed did all that. And the Fed did all that because it stepped in when things begin to go down, when the markets begin to go down back during the pandemic. That was that QE, or quantitative easing, where they injected the economy with cash. They flooded it with cash. So everybody would get back to actually buying stuff and not hunkering down in their homes during the pandemic, right? But that was all about keeping the machine going, because the Fed is tied to institutions, markets, right? They say they care about me and you and maximum employment and price stability, but they got to make sure this machine keeps running. I mean, think about it. Why do you think the Fed will allow its 12 presidents at the 12 different Feds around the country? Why do they allow them to get out and speak and do speeches and give press conferences? And why do they publish their meeting minutes, right? You can go look at the meeting minutes from any of their meetings. You can go look at those. Why do they do all that? Why do they put all that communication out into the for us to see? It's because they're trying to give the appearance of keeping the American public informed, right? It's called controlled economic communication, with very, very carefully curated, rehearsed words and language to pacify and keep us feeling like the Fed has our best interests at heart and the Fed is really on our sides, right? But here's the kicker. The Fed, the Federal Reserve here in America, it operates independently, which really means this: the Fed is not directly accountable to the people. The Fed is not directly accountable to voters. The Fed can pretty much almost do what it wants to do. But they're going to come out and tell you that we got two mandates. We have maximum employment and we got price stability. And we really want, they can come out and give you all this flowery language because they're not tied to you. You didn't vote them in. So that means you can't vote them out, right? They're not accountable to you. They're not accountable to us. So if they're not accountable to us, do you really think they have your best interests at heart? I'm going to let you think about that one. The Fed only exists because we have confidence in the Fed. And the Fed is not going to do anything to mess up that trust and that confidence. I'm just saying. So what should you be doing? I don't want to end any video without telling you what should you be doing as a consumer, as an investor, as a small business owner. First, here's one thing you can do. Boost your savings in your high yield savings accounts. Let me explain. High yield savings accounts for us as investors and regular average people, high yield savings accounts, the return on investment of those, the interest that you receive from having your money in the high yield savings account, it fluctuates. Those are variable rate interests. And so as the Federal Reserve lowers the Fed funds rate, so will the amount of interest that the banks are going to give you in your high yield savings accounts. So now, while the interest rate is still high, it might be an opportunity to move some money into your high yield savings accounts. But when the Fed starts lowering the rates, the Fed funds rate, your interest rate is going to start coming down in your high yield savings accounts, right? Like you can get 4% right now somewhere, 3.5%, 4%. But let the rates go down by 50 basis points or 0.5% or a full percentage point. You won't get 4%. You'll be getting 3%, 2.5%. And then, of course, as always, you always want to pay down your high interest debt. So that means your car loans, put less on your credit cards, your personal loans, all those short-term loans, paying them down right now while interest rates are high is going to help you save some money, right? If you're a small business, maybe you can review your lines of credit that you may have and possibly get ready for some refinancing sometime soon, right? But you want to start preparing your business. If you're in business as a small business, you always want to be looking forward. So there's no rate decrease in the Fed funds rate today, but guess what? In 2 months, I think in September, I think we're going to see perhaps a lower interest rate. So you want to start preparing for that if you have a small business, right? And then, of course, you want to spend on large ticket items cautiously in this time. Now, tariffs have not had the effect on prices or inflation that everybody thought it would initially. But that doesn't mean there's not some lag time there where we may see the pressures of tariffs actually start taking place more towards the latter half of this year. So that means you want to spend cautiously, right? Prioritize the essential stuff. And maybe you can take that vacation where you was going to kick it take that and put that off for 6 months or a year. And as always, you want to strengthen your cash reserves if you feel like you need to. Make sure you have an emergency fund that's built up to 5-6 months of your monthly expenses, right? So you have a little bit of reserves in case something goes wrong, layoffs, job loss, unemployment goes higher. We just don't know. But I'm saying prepare for rate cuts. In my opinion, a little later in the fall. September meeting, I think, will probably be the first rate cut. So, hey, I hope that helped you understand why the Fed is doing what they're doing, why the Fed is not lowering rates right now, and why I think that they are defying President Trump, and why I say they're a propaganda machine. No shade to the Fed. It just is what it is. Stay tuned to this channel right here. Whenever we have something that's important that we need to know as consumers or small business owners or even as investors, I'm going to bring it to you on this channel. Hey, listen, if you got anything of value out of this quick breakdown of today's meeting and what the Fed is all about, do me a favor, smash the like button below. Share this video with somebody you know. If you're not a subscriber, please consider subscribing to my channel for more updates. And drop me a comment below. Let me know what you think. Should the Fed be lowering the Fed funds rate right now? Or is it okay for them to sort of be in defiance of Donald Trump? Or at least say, you know what? We're a little concerned right now, so we're not going to lower rates. Let me know what you think in the comment section below. Until the next video, peace.